Hey everyone, welcome back to my channel. A very happy new year to each and every one of you watching this video. May this year bring you a lot of happiness in your life. So in this video, we'll be continuing with the concept of gift tax, that is gift tax part 2. Let us start. So in today's video, we'll be learning about who is a relative, what happens to the person receiving the gift subsequently transfers the property, certain interesting exceptions that are provided in the act, and certain examples. We have already learned that gift received from a relative is not taxable. But who is a relative? Relative is defined in Income Tax Act, which is spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister of either of the parents of the individual, any lineal ascendant or descendant of the individual and of spouse of the individual, and spouse of any person referred from B to F. Now let us understand what happens if the person receiving the gift subsequently transfers the property to a third person. Taking the same example, I own this piece of land for which stamp duty value is 1 crore rupees. I transfer this property to my friend free of cost, which means my friend is receiving the benefit worth rupees 1 crore. So my friend has to pay tax on 1 crore rupees as income from gifts. Let us say he holds the property for some time and subsequently transfers this land to a third person. He transfers this land for 2 crore rupees. Normally, what happens in capital gains, let us assume I purchase a piece of land for 20 lakhs. I subsequently transfer the property for 30 lakhs. So I receive 30 lakhs and my cost of acquisition is 20 lakhs. What happens is my sale consideration will be 30 lakhs. I get a rebate of the cost of purchase, which is 20 lakhs, and the balance 10 lakhs, which is my profit, is termed as capital gains. I will have to add this 10 lakhs to my total income and pay tax on the respective rates. Here in our transaction, what has happened? My friend has transferred the property to a third person for 2 crores, which means the sale consideration is 2 crore rupees. But what is the cost of acquisition? Nil, because he has not paid a single rupee to acquire the property, but he has got it for free from me. So, does that mean his cost of acquisition is zero and the entire 2 crore rupees will be termed as capital gains? The answer is no. Why? Because remember, when my friend received the property free of cost, he has already paid tax on 1 crore rupees. Why? Because the stamp duty value on the date of transfer was 1 crore rupees. So he has paid 1 crore rupees as income from other sources. Since he has already paid tax on 1 crore rupees, the government will not levy additional tax on this 1 crore rupees, which will otherwise become double taxation. So technically, my friend should get a rebate of 1 crore rupees as cost of acquisition against the sale consideration of 2 crore rupees. This provision is given in section 49, subsection 4, which says if the transaction has already suffered taxation under income from other sources, then the cost of acquisition for the subsequent transfer will be the value as determined at the time of income from other sources, which means the cost of acquisition here becomes the value at which you have paid tax, which is 1 crore rupees. So what is the capital gain amount? It is not 2 crores, but it is 1 crore rupees. Capital gain has to be paid on this 1 crore rupees. Let us take another example. The example that we discussed right now was free of cost transfer. But what if there is an inadequate consideration transfer? Assuming the piece of land, the stamp duty value is 60 lakhs, I transfer this land to my friend, not for free of cost, but I receive 40 lakh rupees in return. So what is the net benefit that my friend is receiving? 20 lakh rupees. So as discussed in my earlier video, my friend has to pay tax only on 20 lakh rupees and not on the entire stamp duty value of 60 lakh rupees. And subsequently, now he transfers the property for 80 lakh rupees, which means sale consideration for him is 80 lakh rupees. What will be the cost of acquisition? Here, it is a hybrid scenario. He has not received the property free of cost, and he has also not paid the entire consideration as well. He has paid only 40 lakh rupees. Does that mean he has to pay tax on 40 lakhs, which is 80 minus 40, or it is 80 minus 60, which is 20? The law clearly provides that the value which is arrived for the purpose of gift tax will be the cost of acquisition, which means even though he has paid only 40 lakh rupees, the cost of acquisition will be 60 lakh rupees, because 40 lakh rupees he has paid consideration, 20 lakh rupees he has already paid income tax. So which means this 20 lakh rupees has already suffered taxation. So the assessee should get a benefit of rebate. So 80 lakh minus 60 lakhs, 20 lakhs will be the capital gain on which he has to pay tax. Now let us discuss a very interesting exception provided in the law. Going back to my same example, I own this piece of land. Let us assume I transfer this land to my friend, not free of cost. This time, I get the entire consideration of 1 crore rupees. I transfer the land for 1 crore rupees. I receive 1 crore rupees entire consideration. But the stamp duty value for this property is 1 crore 2 lakh rupees, which means what? My friend has paid 1 crore rupees, but the stamp duty value for that property is 1 crore 2 lakh rupees, which means the benefit that he is receiving is 2 lakh rupees. 2 lakh rupees is exceeding 50,000 rupees, so he'll have to pay tax on 2 lakh rupees as income from other sources. But there are certain properties where the market value has undergone a change and it has come down, but the stamp duty values may not be revised. The government recognizes these transactions and it has given a tolerance band. What is a tolerance band? So technically, if you see, this is a transaction of inadequate consideration. My friend is receiving property worth 1 crore 2 lakhs as per the stamp authorities, but in turn paying only 1 crore rupees. 2 lakh rupees should be added to his total income as income from other sources. But there is a tolerance band given in the law. What is this tolerance band? It means that even though certain transactions are below stamp duty value, even then there will be no income from other sources. What is the tolerance band which is given? It is 10%. Let us understand how does this work. 10% means stamp duty value should be within 110% of the sale consideration. Taking our own example, 1 crore rupees is the sale consideration. How much is 110% of the sale consideration? It is 1 crore 10 lakh rupees. How much is the stamp duty value? 1 crore 2 lakh rupees. 1 crore 2 lakh rupees is within 1 crore 10 lakh rupees, which means this transaction, even though it is happening at inadequate consideration, there will not be tax on this 2 lakh rupees. So remembering this rule will be very easy. Take the sale consideration, consider its 110%, and see if stamp duty value is lying in between 110% of sale consideration. If yes, then such inadequate consideration will not be taxed. Our example, sale consideration is 1 crore rupees. 110% of 1 crore rupees is 1 crore 10 lakh rupees. If stamp duty value is, let's say, 1 crore 2 lakh rupees, there will not be tax. 1 crore 4 lakh rupees, no tax. 1 crore 9 lakh rupees, no tax. But if the stamp duty value is 1 crore 20 lakh rupees, then entire 20 lakh rupees will be taxed as income from other sources. This is the thumb rule that you will have to remember. Now let us come to certain interesting examples. Before that, I'll just write down the chart once again. If you receive anything in monetary terms exceeding rupees 50,000 rupees, it is taxed as income from other source. If you receive any immovable property for free of cost or for inadequate consideration where the value of benefit exceeds rupees 50,000 rupees, then the entire value of benefit will be taxed as income from other sources. Other properties where we discussed jewelry, bullion, shares, securities, archaeological collections, etc. Here also either free of cost or for inadequate consideration where the value of benefit exceeds 50,000 rupees, then there will be tax under income from other sources. Let us take certain interesting examples. I receive 20,000 rupees from friend 1. I receive 40,000 rupees from friend 2. What is happening here? Friend 1 is giving me 20,000 rupees. Is it exceeding 50,000? No. Friend 2 is giving me 40,000. Is it exceeding 50,000 rupees? No. But in aggregate, how much am I receiving? 60,000 rupees. Is it exceeding 50,000? Yes. So do I have to pay tax on the entire 60,000? The answer is yes. Let us take another example. I receive a car worth rupees 20 lakhs from my friend free of cost. Do I have to pay tax on this 20 lakhs? The answer is no. Why? Because car is not a listed item in the list provided in the law, which is only shares, securities, jewelry, bullion, archaeological collections. Car is not listed. So even if I receive car worth rupees 1 crore, I don't have to pay tax. Third example, I receive rupees 40,000 from friend 1. I receive a share of a company worth rupees 20,000 from friend 2. Here is an interesting example. This I have received in monetary terms. This I have received as a part of other properties. If you see my chart, monetary terms 50,000, other properties 50,000. I have received 40,000 which belongs to this category. I have received 20,000 which belongs to this category. So, do I have to aggregate and see, or do I have to see each category wise? The law provides that it has to be seen each category wise, which means money I have received 40,000, it is not exceeding 50,000. Other properties, which is a share of a company, I have received 20,000, it is not exceeding 50,000. So the entire transaction is not taxable because under each category I have to exceed 50,000 rupees, only then there has to be tax. Let us take another example. I received 40,000 from my friend on 20th March 2022. I receive another 40,000 from the same person on 20th April 2022. 40,000 individually is not exceeding, but in aggregate 80,000 is exceeding 50,000 rupees. So does that mean I have to pay tax on this 80,000? No, because this 40,000 belongs to financial year 2021-22. This gift received belongs to financial year 22-23. So what we have discussed is 50,000 per financial year. So if it is received or spread through two different financial years, so for each financial year, you have to see the limit of 50,000 rupees. So in this case, there won't be any income tax levied. Yes. So I hope the concept of gift tax is clear to you all. In this year, may you receive a lot of gifts, but before receiving any gift, remember all the provisions that we have discussed in both the parts of gift taxation, and then you receive the gifts. Thank you all for watching. I'll see you in my next video. Bye bye.